Hi and welcome back to my channel. Thanks for joining today. If you're new here, then hi, I'm Antonia, or welcome back. If you're here to learn how to pay no tax, you're in the wrong place. But for everybody else, today I wanted to talk about something that's often overlooked by small businesses, which is pension contributions. So grab a cuppa, get comfortable, and let's talk about one of the best tax breaks there is out there. While we're all busy focusing on our businesses and the day-to-day challenges, it's just as important to think about securing our financial future in the long term. A pension is one of the most tax efficient and reliable ways to do that. So let's start with why do pensions matter. Unlike employees who have an employer and a workplace pension which they're auto-enrolled into, as small business owners we don't get that safety net automatically. The responsibility to build our retirement savings falls squarely on our shoulders. However, there are great benefits to setting up a pension that's tailored to your plan and your needs, whether you're self-employed, a sole trader, or a company director. These benefits go beyond just saving for retirement. They include significant tax advantages that can help your business and your personal finances. Let's break down what a personal pension is. It's essentially a pot of money that you keep putting money into throughout your working life. This money is invested and it grows and it grows and it grows over time. And that provides you an income when you retire. There are two ways to approach pension contributions depending on your business setup. If you're self-employed or a sole trader, you can contribute to a personal pension directly from your income. The great thing about this is the tax relief that you receive from the government. Here's how it works. For every £80 that you contribute, HMRC will top that up with an extra £20, giving you a total contribution of £100. That's an immediate boost to your investment. If you're a higher rate taxpayer, you get the relief through two methods. You get the 20% top up into the pension fund from HMRC. Then, because you're a higher rate taxpayer, some of your income is being taxed at the higher or additional rate of 40%. To get the extra relief, the basic rate band of tax is increased against your income. This means that income that was previously falling into the higher rate of tax is now being covered in the basic rate of tax through the basic rate band. And that means some of your income that was previously getting taxed 40% is now getting taxed at 20%, giving you that tax saving. Let's run through an example. So if you pay £150 per month into a personal pension, that's £1,800 per year. You get basic relief top up, which adds £450 to the pot, totaling £2,250 pension contributions. Then, when you fill in your self-assessment, you can claim the gross amount as £2,250 as a basic rate band extension. That means that an extra £2,250 of your income that was previously being taxed at the higher rate at 40% is now being taxed at the basic rate at 20%, giving you a further £450 saving. In summary, that's £450 top up into your pension pot and £450 tax saving, meaning that your £2,250 pension only cost you £1,350. If you're a director of a limited company, the setup is a bit different, but potentially even more advantageous. Your company can contribute to the pension as a business expense. These contributions are deductible from your company's profits, meaning that you get tax relief through corporation tax. In addition, company pension contributions are not subject to national insurance contributions, which is another area that you save. It's a highly tax efficient way to invest in your retirement while saving corporation tax to benefit your company. If we use the earlier example and you pay £150 per month into a personal pension from the business bank account and you take £60,000 salary out of your company, then you get £450 top up into your pension pot, £450 tax relief through self-assessment by extending the basic rate band, and up to £450 corporation tax relief depending on your marginal rate. Also, to note, tax bands haven't changed since 2021, and this means that more and more people are getting pushed into the higher rates of tax through their earnings going up, which is caused by inflation. So this is a way that you can start to try and challenge and get some of that money back. Now let's talk about contribution limits. The annual allowance for pension contributions in the UK is currently £60,000 or 100% of your annual earnings. whichever is lower. This is the maximum amount that you can contribute each year without incurring additional tax charges. So you can put more money into the pension, but you won't get the tax relief on that extra money once you've exceeded the limits. However, if you haven't used your full allowance in the past 3 years, you can carry forward unused allowances to be able to make larger contributions in the current year. This is particularly useful if your business has had a strong financial year and you want to maximise your tax savings. Another big advantage of pensions is tax-free growth. The money in your pension pot is invested, and any growth or returns are not subject to income tax or capital gains tax. When you reach 55, you can take up to 25% of your pension pot as a tax-free lump. The remaining 75% can provide you with a flexible income, whether through regular withdrawals or purchasing an annuity. If you're drawing a flexible income, this is taxed through pay as you earn. So think about what level of income you need when you retire so that you can hopefully get a strategy where you only need to withdraw the pension within the basic rate bands to save on tax when taking it back out. I know that as small business owners, many of us feel hesitant about locking money away in a pension, especially when cash flow can be unpredictable. A misconception is that pensions are overly complex. In reality, modern pension schemes are highly flexible and transparent. You can adjust your pension contributions month to month if you need to. You don't have to keep them at a fixed rate. You don't even have to put money into the pension 1 month if you can't afford it. So how do you get started? First, you need to choose the right pension plan. This could be a self-invested personal pension, which is known as a SIP, and this gives you control over how your money is invested. How your money is invested is often based on your risk profile, and you can select if you want a higher risk reward strategy or if you want a lower risk and certain strategy. You can pick those as options as you start the pension. Once you've selected a risk profile, the provider is then responsible for investing the money on your behalf. An example of this is someone like PensionBee or Moneybox. Alternatively, you can speak to a financial advisor for a more traditional pension. You just have to get the right fit for you and what you want to achieve. Next, as part of your financial wellness, set a realistic target for you to be able to save each month. If you're looking at your profits and managing your business performance on a regular basis, then you should be able to set a budget for how much you can afford to save into the pension each month. Consistently saving can make a big difference because of compound growth. Then as you grow, review your pension and make sure it still fits your targets and business goals. In summary, personal pension contributions are a powerful way for small business owners to secure their future while still enjoying significant tax benefits. Today we've talked about tax relief you can get as a sole trader or a company director. We've covered the different types of pensions and how to get started. I hope that's helped you understand how to plan for retirement, and I'm happy to answer any questions you might have. Just drop me a comment and I'll get back to you. I wanted to say thanks for watching today, and if you'd like to speak to me directly, you can book a one-to-one free meeting using the links in the description, or if you'd like to become a client, you can also book a meeting or drop us an email. If you found this video helpful, please give it a thumbs up and subscribe to my channel for more tips and learning for small business owners, and I hope to see you again soon.